Welcome to your daily stock market summary from MarketSnap. Hey everyone, buckle up because we've got a wild ride to unpack from today's market action. It's been a rough day on Wall Street with a lot of red across the board, driven by some serious geopolitical tensions and economic headwinds. Let's dive right into the chaos and see what's moving the needle for us long-term investors, while also keeping an eye on the short-term waves. First up, let's talk indexes. The major benchmarks took a hit today as risk-off sentiment swept through global markets. The Dow Jones dropped nearly 0.5%, while the S&P 500 and Nasdaq also slipped, both down a bit over 0.25%. The only bright spot was the Russell 2000, which managed to climb about 0.2%, showing some resilience in small caps. But overall, the mood is cautious, with the VIX pulling back a bit, but still signaling elevated fear in the market. For us long-term players, this kind of volatility isn't new. It's a reminder to stay focused on fundamentals while watching for potential buying opportunities if these dips deepen. Now let's zoom out to the bigger picture, shaking things up. The headlines are dominated by escalating tensions in the Middle East, particularly with the Iran conflict driving oil prices through the roof. Crude breached $115 a barrel after strikes on key energy infrastructure. This surge is stoking inflation fears, and the Fed's latest meeting didn't help calm nerves. They held rates steady, signaling a hawkish stance with no cuts expected through 2026 due to persistent inflation pressures, now revised up to 2.7%. Add to that a troubling pattern in the bond market, reminiscent of pre-2008 crisis days, and investor sentiment is taking a beating. Bearish views in the AI survey have crossed 50%. For long-term investors, this means keeping a close watch on inflation-sensitive sectors and considering hedges, but also recognizing that energy shocks often create overreactions to exploit down the line. On the brighter side, let's check out some of today's large-cap gainers. Energy and tech names stole the show as oil's rally lifted stocks like Equinor and Cheniere Energy, both up over 5%. In tech, Lumentum Holdings surged more than 10%, riding the wave of AI-driven optical demand, while Ciena also posted a strong gain of over 7%. These moves highlight pockets of strength even in a down market. Energy is an obvious play with current events, and tech's AI tailwind remains a long-term theme worth tracking for us. But not everyone's celebrating. Among the large-cap losers, Alibaba took a hard hit, dropping over 7% as heavy AI spending weighs on profits. Newmont Corporation also cratered nearly 7% as gold prices slumped despite geopolitical unrest, and Spotify fell over 6% amid broader consumer spending concerns. These declines remind us that even big names aren't immune to macro pressures. For long-term investors, dips like these in fundamentally sound companies could be entry points, but timing and conviction are key. Looking at the market movers, Nvidia remains a focal point despite a slight dip about 1%, still a heavyweight in trading volume as AI hype persists. Tesla, on the other hand, slid over 3%, reflecting ongoing delivery and growth concerns. Micron Technology also saw heavy action, down nearly 4% even after a blowout earnings report. More on that in a bit. These names show how quickly sentiment can shift, even for market darlings. As long-term investors, we need to filter out the noise and focus on whether these price moves align with the underlying business trajectory. Diving into the most active stocks, it's no surprise Nvidia tops the list with massive trading volume alongside Micron and Intel, which popped over 2.5% as AI and semiconductor interest persists. SoFi Technologies and Rivian also saw heavy action, with Rivian gaining nearly 4% on news of a robotaxi partnership with Uber. These high-volume names often reflect short-term trader focus, but for us, they're a signal to dig deeper into whether the momentum has staying power for a multi-year horizon. Let's shift gears to earnings, as this week's calendar is packed with names to watch. Big hitters like FedEx, Accenture, and Micron are reporting, and the results are already making waves. Micron, for instance, nearly tripled revenue thanks to AI memory chip demand, though its stock slipped post-earnings as investors questioned margin peaks. Darden Restaurants also reported, meeting expectations with solid same-store sales growth, but macro risks loom. Carnival and PDD Holdings are up next, and their updates could shed light on consumer spending trends. For long-term investors, earnings are a window into operational health. Look past the immediate reaction and focus on guidance and strategic moves. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these reports. Peeking at the top performers over the past week, large caps like Garmin and Shopify soared over 14%, while Lumentum and AppLovin also posted double-digit gains. Occidental Petroleum jumped over 14% as oil's rally fueled energy stocks. These weekly movers show where momentum is building, some driven by sector trends, others by company-specific catalysts. For us, it's about discerning if these gains are sustainable or just short-term hype. On the flip side, the past week's biggest losers include Genuine Parts, down over 20%, and Rivian, off 14%, alongside names like Okta and Atlassian, both down over 12%. These steep drops often signal sector weakness or specific headwinds, something to monitor if you're eyeing a contrarian play for the long haul. Finally, let's touch on sector performance over the week. Industrials led the pack with a 2.1% gain, followed by consumer cyclical, up 1.6%. Energy also shone, up over 4.6% on oil's surge. These sector moves underscore where capital is flowing right now, and for long-term portfolios, aligning with strong sectors like energy could offer stability amid uncertainty. On the weaker end, healthcare lagged with a 0.6% drop, while utilities and financial services also dipped slightly. These underperformers might face short-term pressure from rising rates and inflation fears, but they could be areas to watch for value if the market overcorrects. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to help you navigate these choppy waters. Whether you're in for the long haul or eyeing short-term plays, we've got the insights to keep your portfolio on track. See you tomorrow.